Good morning, everybody. Dane Wilson here, Lender's Choice Credit Solutions. Hope I'm doing this right. I've never actually done a live video before, but I thought this might be the best way to do it. This video is for my lenders, my loan officers, and realtors that I work with. Just wanted to talk a little bit about credit scores, hopefully give you some information this morning that can help you help more clients. So a Wall Street Journal article came out this morning, and it was talking about there's a new FICO scoring model that's coming out, and that FICO scoring model is called the Ultra FICO scores. Okay, so if you don't already know, there's been a ton of FICO scoring models that have come out. There's been over 60 FICO scoring models since 2011. Most people, I think when I think most people think that there's two types of credit scores. There's what a loan officer pulls, and then there's everything else. There's what you're getting online from Credit Karma or whatever, but really there's hundreds of different scoring models. There's scoring models specific for auto dealerships, for mortgage, for credit cards and things like that. There's insurance. There's tons of different scoring models. And so the purpose of this is just to talk about which ones really to focus on and which ones matter and which ones don't matter. So this new Ultra FICO model that's coming out, and you can read the article, I'll post it, but basically what they're saying is they're going to use people's bank accounts to see how they kind of manage their money, and they're saying that this will actually help people improve their credit scores more, because I guess you may have lower credit scores, but if you're managing your bank accounts well and you're keeping money in your account and stuff like that, then that shows your credit worthiness. Now, I don't know exactly how they're going to keep up with that or do that. I don't know how I feel about that, them having all that information. They already have a lot of information, so we'll see how that one goes. I feel like the next thing they're going to be asking is, do you shower or bathe, or boxers or briefs, or more private information. But they anyway. So the Ultra FICO scores are the new scores that are coming out now. There's been two other sort of recent scores that are coming out as far as FICO goes, and that's FICO 8 and 9. The problem is, as you already probably know, loan officers don't use FICO 8 or 9. Loan officers are using FICO 2, FICO 4, and FICO 5. FICO 8 and FICO 9 come out just about as often as an iPhone. Different FICO scores come out about as often as different iPhone models do, and they change things up where they'll say something like medical bills aren't going to be as important or as a big a factor, or paid collections aren't going to hurt your score anymore. Well, what happens is consumers are getting confused because they read these articles or they see this information that's being posted, and they think that that's going to apply to when they go buy a house or whatever the case may be. So if they have a bunch of medical bills, they're like, oh, I guess I don't have to worry about those anymore. Well, lenders are still using older FICO models, and it even gets more confusing. There's also something called Vantage. If you're pulling your Credit Karma or different sites online, you're getting a Vantage score, which was invented by the credit bureaus, I think around 2013. And those scores are even more different than FICO scores are, and more lax on certain things like medical bills and collection accounts and things like that. And that's where it gets even more confusing. In fact, last year in 2017, the credit bureaus got sued for like $23 million because they advertise on TV, pricing Experian commercials. They advertise on TV that their scores are what matter or what lenders are looking at, and they're not. And so they got sued by the CFPB because the CFPB realized they're making false promises. They're saying that you should buy their scores and use their scores, but their scores don't matter. So anyway, if you're a loan officer, keep in mind, lenders use 2, 4, and 5. Okay, those scores still count medical bills as a negative thing. They still count paid collections as a negative thing. They're not looking at your rental history on if you get Rental Karma or something like that. They're not looking at that. And then they're not looking at your bank statements or anything like that. And as far as I know, they won't be doing anything like that for a long, long time. These new scoring models are coming out often, and they have some big exciting headline, but no one at this point is using them. Now, if it can help more home buyers get approved, I think we'd all be on board for it. But as of now, they've been using the same scores for a long time, and I don't think that they'll be switching anytime soon, just based on what I've seen in the past. So if you have any questions about that, feel free to shoot me a message, and I'd love to kind of discuss that more with you. I think that's it. Have a great day.